So welcome back. So now we are joined by Chairman of the Clico Policy Holders Group, Mr. Peter Permel. Mr. Permel, what are your concerns this morning?
Marlon. Well, first of all, good morning, Marlon.
Yes, good morning.
And first of all, let me thank you for having me on the program. And it's
Anytime.
a pleasure being here with you. I think it's the first time you're being interviewed.
Yes.
And also let me say good morning to all the thousands of Clico policy holders who will be watching the program this morning. Yeah, first of all, as you know, Marlon, the CIF, which is the Clico Investment Fund, came to an end on the 2nd of January 2023, this year actually. And the Clico Investment Fund was part of an initiative by the then People's Partnership government in order to assist policyholders who were hard done by after the collapse of Clico with respect to getting back their monies. Now, what has happened is that 10 years, the fund was, let me just give some background information. The fund was started in 2012, the 18th of October 2012. It was registered in the 18th of October 2012. And from that time to now, the policyholders have been waiting to be paid their money, which would have been 10 years hence. And that would have, as I said, ended on the 2nd of January 2023. Now, what has happened is that the minister had indicated, that's the Minister of Finance in Parliament, based on a question on the adjournment, that the fund was going to distribute its assets, which comprise of Republic Bank shares, government bonds, and cash in specie, which means in kind. The actual underlying assets would be distributed to the unit holders. Since then, those assets, at least three of the assets have been distributed, which would be the Republic Bank shares, the bonds, and we're happy about that, and some cash. Now, therein lies the problem. The problem is with the cash. Now, what I did is I've been monitoring the situation very closely because I want to ensure that those policyholders turn CIF unit holders, now Republic Bank shareholders, bond holders, and recipients of cash, get all that they are entitled to.
Yes.
Now, where we are now is that, as I said, we are satisfied with the Republic Bank shares, we are satisfied with the bonds that we got. The problem is we are not satisfied with the cash portion of it. And the reason for that is, I indicated as early as last year, December, around the last week of December, that there was a dividend that Republic Bank paid to the CIF because of the fact that the CIF was a shareholder in Republic Bank of $138 million. Now those funds have been acknowledged by the CIF because they issue their audited, or unaudited I should say, financial statements, which would be equivalent to your management accounts. That was issued just before Carnival, the week of Carnival there. And when I took a look at it, I realized that there was an item, a line item, I don't know if you have it on your graphic, of $35 million that was deducted from the monies that are due to those unit holders. And what was interesting about it, or I should say curious about it, is that there was no note explaining what this $35 million, except it said it was accrued expenses. Now,
what were the expenses?
Exactly, and just to give you a little crash course in accounting, there are two types of expenses that you would recognize in your balance sheet, and they would either be accrued expenses or you make a provision for expenses that you anticipate you will incur. In this case, they have referred to as accrued expenses, which means that you have actually incurred the expense, but you have not yet paid the expense. So in other words, you recognize that there's an expense that you will have to pay because you've already incurred it, but you have not yet paid it. So you call it accrued expenses. A provision is slightly different, where you are not certain as to what the expenses you will incur will be. So you make a provision for it. So the difference between accrued expenses and making a provision for unanticipated expenses is that, one, there's a level of certainty. You know that this is an expense you will incur. It's just that you have not paid for it. Whereas a provision is you're not sure, but there's a good probability that you will incur this expense.
So there's a level of confusion.
Well, no, not insofar as that is concerned.
Yes.
Where the confusion comes in is they have not clearly indicated what this $35 million of accrued expenses is all about.
Yes.
And $35 million by any standard is a whopping sum of money. And when I checked, I did my own research. Last year there was no such thing as, or no figure as high as 35 million for expenses in the accounts of the Clico Investment Fund. That is for 2021, the 2021 audited financial statements. So the unaudited financial statements for 22 is showing a line item called accrued expenses of $35 million. They subsequently responded, because I wrote a letter to the editor in your newspaper, Marlon.
Yes.
And I queried the amount. Now, they didn't respond to me directly, but they did put out a notice to shareholders indicating that they have withheld some monies, and this is to deal with deregulating the CIF and delisting the CIF. And just for the benefit of your viewers, what that means is that now that the fund has ended, there's no need for the fund to be listed on the Trinidad and Tobago Stock Exchange. So they have to delist the fund, they have to take it off. There's a process that is involved there. They have to write to the stock exchange. Stock exchange will then have to agree with it, and then they will make an application to the SEC, the Trinidad and Tobago Securities and Exchange Commission. Now, when I checked, the cost of doing both those things, in the case of the TTSC, where you have to get the fund delisted, is just $20,000.
Yes.
$20,000. And in the case of the SEC, it's $1,000 to make the application. So we're talking about $21,000 in terms of delisting and deregulation. They also tried to throw into that notice that they published the day before the end of the month, end of February, is that any other closing expenses for the fund. Now, what your viewers have to understand is this fund is really a paper company. It's really called the Clico Trust Corporation. It is owned entirely, 100% owned by the government of the Republic of Trinidad and Tobago under Corporation Sole. Corporation Sole is the Minister of Finance. So all the assets of the country are vested in Corporation Sole, so that the Corporation Sole owns 100% of the shares. So this is really a state enterprise who's acting as the trustee for the Clico Investment Fund. So one would have thought that this entity would ensure that everything is done properly and these policyholders turned CIF unit holders are paid all the monies that they are due. Now, where we are is that so that $35 million is being withheld. There's no indication specifically what this $35 million is about. However, they are saying that hopefully, if there are no other closing charges, there will be some additional funds to be paid to unit holders.
So no one has said to the Clico policy holders, in a real sense, or in a wider sense, what all of this money is being withheld for. So there has been no response from the government?
No. Well, I do expect the government to respond at this stage.
Yes.
Because there's a board that runs the Clico Trust Corporation, and there are about 4 members on that board. Now, the address for that corporation is the Ministry of Finance. So as I said, it's a paper company. So there are no staff members. So there's no severance benefits to be paid. All the functions of the fund are outsourced. So Republic Bank was the fund administrator, the TTCD was the fund registrar, and they have AGs as the secretariat for the fund. So the fund has no employees. So there's no such thing as severance to be paid. Yes. So let's take that off the table. There's the audit fees and all of that are very small, as in the thousands, maybe $10,000 and so on. So there's no significant expense that I can see that would cause the fund to incur an expense of $35 million. It just does not make sense. So I would have thought that after I penned my letter to the editor, I would have gotten some sort of satisfactory explanation as to what this $35 million was about, or some indication that it was an error. So I think what I think I'm going to do on your program this morning, Marlon, is I'm going to call on the Minister of Finance, who is overall in charge, because he's Corporation Sole, and this is a state enterprise that is under his jurisdiction, to use his good office to look into this matter for us, to find out exactly what is this $35 million that is being withheld all about. Because by now, we are in March, by now the fund, those directors on the board of the fund should know exactly what expenses they anticipate that the fund is likely to incur. And certainly it cannot be anywhere in the vicinity of $35 million. So I would like to use your this forum, Marlon, to call on the Minister of Finance, the Honorable Mr. Colm Inbert, to kindly use his good offices to look into this matter for us, to ensure that those policyholders who have been suffering for the last 10 years, waiting for their hard-earned money, because this is not government's money. This is the policyholders' money that has been invested in the CIF.
How many policyholders are we speaking about?
We're talking about over 6,000 unit holders who would at some point in time been a policyholder. So that it's a lot of people we're talking about here. So the people looking at the program this morning, I'm sure there are a lot of them wondering, what the hell is going on here with this $35 million? And more than that, when are we likely to be paid this money? Because there's no indication on that notice as to when the fund is going to be finally wound up and when the additional monies are going to be paid or what that figure is going to be. So I'm saying that that is totally unacceptable, it's unsatisfactory, it's untidy, and I would think that the Ministry of Finance would be, doing a better job in terms of ensuring that the unit holders are kept properly informed with accurate and more detailed information.
What would be an appropriate time for the Minister or the Ministry of Finance to respond to the policyholders?
Well, I don't want to put a time frame on the Minister. I mean, I'm sure the Minister, and he's usually very prompt, and I'm sure he's probably listening to your program this morning. This shouldn't take very long for him to look into, because as I said, it's really numbers on a piece of paper. So that the shares have been distributed, the bonds have been distributed, it's just a question of the cash. And they have done an unaudited financial statement up to the end of December 2022. So they must know what items have gone into making of that balance sheet to create an accrued expense of $35 million. I mean, I hope this is not to pay some consultant some whopping set of money at the expense of the unit holders. I don't want to believe that. And that's why I'm saying I'm sure the Minister will also be very concerned, as I am, to find out exactly what this $35 million is all about. What
has the response been from the policyholders? How do they feel about this entire situation? I'm sure they're not pleased.
Well, we don't have a bunch of happy campers this morning because, as I said, they've been waiting 10 years to get this money. And to come at this stage, at this 99th hour, to hear that $35 million have been deducted from your hard-earned money is not something anybody could be pleased about. So I'm saying that this is something that I think they should be looked into with some level of urgency. It also sets a very bad precedent, Marlon, for other funds that are listed on the Trinidad and Tobago Stock Exchange, because there's another fund called the Praetorian Fund, and that has been taking 8 years or more after the period within which it was supposed to wind up, and it is still not producing the necessary audited financials and so on. So certainly this is something that the Minister would want to ensure that it is done properly, it is done in the best interest of those policyholders who became unit holders. And as I said, I will leave it in his capable hands, and I'm sure he will look into it and respond.
But some people may say, how could this have happened? Were there not any checks and balances in place?
Well, there are checks and balances. I would think of course there will be checks and balances. But I don't know. I mean, I don't want to proffer any reason or explanation as to how $35 million could pop into our balance sheet for accrued expenses. I really don't want to do that. I mean, it could be an overestimation of what the closing expenses would be. It could be that, because remember, this was a novel fund. This is not something that happened before. This is the first time you have a fund of this nature. And it is possible that the people who are in charge right now, those directors, and there are about 4 of them, who are in charge of the fund, maybe they're inexperienced, maybe they don't know, maybe they weren't properly advised, or they were ill-advised. I don't know. But I'm sure if they look into it and they realize, as I told you, the listing fees is just $20,000, Marlon. The application to the SEC is just $1,000. How do you move, and even if we round that up to, let's say, $100,000, how do you move from $100,000 to $35 million? I am at a total loss. And as I said, I cannot leave this hanging there. They can't just tell us, well, we will, whenever the fund is finally wound up, we will pay that whatever additional money. That is totally unacceptable.
Yeah. Mr. Pavel, we just have a few seconds. Again, anything else you'd like to add?
Well, all I would like to add, a lot of people have been asking me, what do they now do with the assets that they have now acquired, the Republic Bank shares, the government bonds, and the cash. And as I don't ever give people any investment advice, what I would tell you is what I would do. And from where I sit, those are gilt-edged securities. The government bond pays 4.25% coupon or interest rate, and they pay twice and semi-annually in April and in October. So you're not going to get that kind of return in the bank if you put your money in a fixed deposit. The Republic Bank shares, they did $1.56 billion in profits last year. They paid a dividend of 4.50 cents, which is about almost 4% return on your investment. The Republic Bank is one of the best run banks regionally. So I would say I would hold on to my assets, and let's see how it goes going forward.
All right, Peter Purmell, thank you very much for coming this morning, sir.
You're most welcome, Marlon, and congratulations on your
position.
position.
Thank you.